Good evening, everyone. I am delighted to welcome you all to today's webinar on a very important and timely subject, the Accreditation Edge, unlocking the power of accredited investor to make diversified investments. We at PMS Bazaar have taken the initiative to conduct knowledge sessions like these for the benefit of our beloved audience to give information, knowledge, and nuanced updates which won't be about the funds and products. In recent years, the concept of accredited investor has gained significant momentum in India, opening up a world of opportunities for high net worth individuals and sophisticated investors. With SEBI introducing a well defined framework, it has become essential to understand not just the eligibility norms but also the advantages and processes associated with becoming an accredited investor. Our distinguished speaker, Mr. Archit Lohia, today in this webinar will walk us through the Accredited Investor Framework, covering SEBI's latest updates, eligibility norms, benefits for HNIs, and the step-by-step process with documentation required to get accredited. Mr. Archit is a pioneer in alternative investments education in India, and over the past 9 years, he has done several skill development programs for more than 6,500 professionals from Indian regulators, banks, custodians, trustee companies, mutual funds, foreign universities, training institutes, and B schools. Mr. Archit is an active co-investor in listed equities, pre-IPO shares and startups, along with foreign NRI and ultra HNI investors. He has previously worked in Ernst and Young and Bombay Stock Exchange in areas inter alia including regulations, compliance, pre-IPO markets, investment due diligence, portfolio management, and finance. Mr. Archit helps managers and distributors to upskill themselves and be industry relevant in the booming AIF industry by developing content for the NISM examinations. He is a CFA charter holder, chartered accountant, CAIA charter holder, and holds an LLB. With that, I would like to hand over the forum to you, sir. You can go ahead with your presentation.
Thanks a lot, Arvind, and thanks PMS Bazaar for having this session and having me as a speaker. You're right that it's compulsory to know what is accreditation and how it will help the investors going forward. India is at the cusp of this change, and HNI investors are welcome to take advantage of SEBI's new reforms. Firstly, let me give an example that right now we have around 8 crore households in India which are eligible under this new accredited investors, and around 8.5 to 9 lakh unique investors can take benefit of this framework. However, we are only seeing around 800 accreditation certificates issued till now. So there is a huge gap, which I thought I have to address this gap, and we should know why we should get accredited as HNI investors. So now the first question comes to your mind is that why do we need this framework of accreditation when anyways we have so many mutual fund schemes, AIF schemes, PMS options, and even SIF, which has now been introduced by SEBI recently. So the whole idea behind this, as per the regulator of India, is that we need to have a different service to those class of investors who have the relevant knowledge of financial products and also have the risk return taking capacity which is higher than retail investors. So we are seeing that our per capita GDP has increased more than 2.5x over the last 5 years, and there's a very increased risk appetite for Indian investors. Now, even a normal investor who's been investing for more than 15 years or 20 years, they will want to invest and explore opportunities in asset classes where they can not only beat mutual fund returns, but also permanently allocate some money towards those asset classes. So that is the whole observation of SEBI. And I believe SEBI is pretty much correct in this case because such investor class who are not, you can say, institutions, but higher risk ability as compared to retail investors. So for those investors, having an asset class and a separate recognition is very important, right? What we are seeing is that nowadays portfolio managers are always appointed who professionally manage these portfolios of HNI investors, and hence SEBI also has taken the leeway that you don't need to have the same regulatory insights for those investors as compared to retail investors, because it is easy to, you can say, deprive of some benefit of retail investors by using some fraudulent activities or market reforms. But it is not easy to fool an HNI investor or maybe give lower returns or misrepresent your performance as well. So that is why SEBI is also on the same track that you need to make these investors firstly aware that what are the benefits and give them a certain tag, and that tag is nothing but accredited investors. And that is why we are having this webinar. Accreditation in this world is important not only in India but all across the world. We have seen US, Singapore, European Union, and Mauritius. These countries are very actively defining accredited investors, and those investors are able to enjoy certain regulatory benefits as compared to normal retail investors. Okay, same concept over here in India, that first SEBI is trying to make that investor class, and then the second step is towards offering a customized investable product through new innovations and new offerings. So you all must have heard about Specialized Investment Fund (SIF), which is being launched, and we already have four mutual fund companies who have launched their SIF products: Quant, Edelweiss, and Nippon and Grow. So we are seeing a lot of interest from investors to invest in SIF. Before we go towards accreditation, we all know that you need to invest minimum 10 lakh rupees in an SIF fund, and a 50 lakh rupee ticket size is required for a PMS, and 1 crore is required for an AIF fund. So SEBI, although has put these minimum investment ticket sizes, but now with the introduction of accreditation of investors, we are trying to remove these barriers of investment and get a new asset class who is free to invest and free to get the benefits of high risk, high return asset classes. So with that, first let's move on to how can you become eligible for accreditation. Up till now we understood why is it important, okay, and what is in it for you. Now the eligibility, firstly the most important for individuals, sole proprietors, and HUF are that the net worth of your individual and as a family jointly should be more than 7.5 crore, right? Out of 7.5 crore, at least 50%, that means 3.75 crore, has to be in the form of financial assets. As you can see, financial assets are your liquid investments in gold, in shares, and also any stake which you own in unlisted pre-IPO shares is now also considered a financial asset. However, your own house in which you are living, that will not be considered as a financial asset, right? So again, 7.5 crore net worth, out of which 3.75 crore has to be at least in form of financial asset, right? If you're not able to meet the 7.5 crore net worth, the second alternative is that you need to show your annual income is more than 2 crore rupees. Okay, again over here, the freedom which we have is that the 2 crore annual income can be jointly of you and your spouse, but not your children, not your brothers, sisters, not your parents, right? So you and a spouse can have a 2 crore annual income. If that is also not available, then the last option which you have is that you can have a net worth of 5 crore. And in addition to that, you can have your annual income of more than 1 crore. Okay, so we are seeing a lot of investors falling in this third category because it is more easier to achieve in today's world, especially if you are in a good management level job and you have built a significant corpus over the years, you saved money and you have a good portfolio, okay, with you and your wife. So again, if your spouse and you show a net worth of 5 crore and an income of 1 crore, okay, again, out of 5 crore, at least 2.5 crore has to be in the form of financial assets, not considering your primary residence, right? So these are the three options available for individuals, for HUF, or even sole proprietors. Okay, typically you would not want to show investments made through your firm or through a proprietorship company, because the capital gain taxes which are available are mainly for your individuals and HUF, right? The second option is for trusts. We are seeing so many family offices established as trusts because they want to make investments in multiple AIF funds, multiple PMSs, and also multiple SIF funds now, right? So for a trust, you have to have your AUM of more than 50 crore rupees, right? Similarly, for a company or an LLP, okay, your net worth of the company as per the latest balance sheet should be at least 50 crore. Okay, the balance sheet will show the net worth, which is the shareholders' funds, right? So, shareholders' funds in the company or LLP should be 50 crore net of your loans, right? And in case you are still having an old partnership firm in which it is not an LLP, but it's a partnership firm as per the 1932 Act. So then in that case, all the individuals who are partners in that firm have to independently meet the criteria of 7.5 crore net worth or 2 crore income or 5 crore net worth plus 1 crore income. Okay. So this is how the eligibility is defined. Okay. We'll also see the documents required to be submitted to SEBI and to the KRA agencies for each of these categories, right? So if you compare this, with Singapore or US. So for example, now US has a minimum net worth requirement of $1 million. Okay, so $1 million in US has been going on since more than 12 years. Okay, SEBI has tried to replicate the same when the new concept note had come out for accreditation. That time dollar was somewhere around 75 rupees. That's if you convert 7.5 crore is taken from that number of $1 million, right? However, we all know that dollar is increasing, and with the currency risk and also increase in risk return appetite, these numbers will definitely increase. It's not going to remain the same over a long period. So right now, since the numbers are at its lowest, I would say it is always good for investors to get the certification as soon as possible, right? Again, in Singapore, it is 1 million Singapore dollars as net worth, and annual income over there they have defined as $200,000, right? In US also, instead of 2 crore rupees, it is 200,000 US dollars. Okay, so again, it's almost similar to what we are seeing in other countries as well. Europe is little more lenient. Instead of having a $1 million cap, it has only 500,000 euros as net worth. Okay, so the regulator over there, which is managing MiFID, under MiFID, you are able to get the approval faster, right? In India, we have SEBI, and in Singapore, we have MAS, that is the Monetary Authority of Singapore. Now, the most important $1 million question is, why do we need accreditation? We already have a good portfolio, it's doing very well. We are able to invest in mutual funds. Okay. We are also investing normally in PMS and AIF. Then why do we need accreditation? Okay. The first answer to the question is that if you become a accredited investor, then you don't need to invest 1 crore in AIF or 50 lakhs in PMS or 10 lakhs in SIF. Your minimum investment thresholds are lower. Okay. So instead of investing, let's say if you only want to invest 1 crore in one AIF, instead of investing 1 crore, you can invest 20 lakh rupees in 5 different AIF strategies. So the most important benefit is that you are not putting all your eggs in one basket. You are getting the benefit of diversification as well. And there will be times where a particular AIF strategy will not work, and you will have a risk of concentration. So that risk goes away because now you are diversifying across minimum 5 AIF funds. Similarly, the same concept applies in PMS as well. You don't need to have a very big ticket size of investment, right? So this is the most important reason why we are seeing investors becoming accredited. The second reason we are seeing is the ability to participate in angel funds and also a new concept called as co-investment vehicles, right? So I'll just give you a different background on what is co-investment vehicle. Nowadays, we are seeing the IPO market is very hot and too many companies are getting listed. In the pre-IPO shares, the company's share price is very, very high, which then reduces at the time of IPO listing, right? The reason behind this is because the pre-IPO market has picked up a lot of steam in the last 5 years after COVID, and many HNI investors are looking to invest along with a big AIF or an anchor investor in the company. The benefit of that is that you can invest before the IPO. You don't need to wait for your shares to be listed or allotted to you in an IPO process. Okay. You can also invest at lower investment price as compared to the IPO price, right? So the discounts which anchor investors or AIFs get, normally you call it QIBs, qualified institutional bidders. The discount which QIBs get, that same discount or even higher can be received if you invest along with a AIF fund, a category 2 AIF fund, right? Now, obviously, SEBI is trying to regulate that market. So, SEBI has come out with a new concept called as a co-investment vehicle, wherein the AIF, which is becoming the anchor investor in a company, is allowed to now have a new SPV, a special purpose vehicle, and invite HNI investors to invest along with the fund in a company. Okay, so I'll just give you a practical example. We have seen Swiggy got listed. So I personally, we had a syndicate which invested 120 crore rupees along with one AIF, which I don't want to name, right? The price at which we got the shares was 344 rupees, and that was around 2 months before the IPO came. And we all know the IPO came around 420 rupees. The company got listed, and it went all the way to 617 rupees as well, right? Obviously, there was a time 6 months back where the shares are going down because of the Trump tariff war and etc. But now we all seeing that after the lock-in is over, the shares are again above the IPO price right now, right? So this opens a lot of opportunities in co-investments, and many HNIs, and in fact many celebrities are also, I can say, are using this as an advantage. Okay. Again, coming back to my question, why accreditation in this case? Because if you want to participate in the co-investment vehicle, which is formed by the AI fund, you have to compulsorily be accredited. Okay. So SEBI has said unless and until the investor putting the money is accredited, you will not be able to participate in pre-IPO deal through a co-investment vehicle. Of course, you can participate in the gray market in the OTC trades, but we all know that that has become risky nowadays because many brokers are quoting different rates for the same company, and the liquidity risk is very high in that market. So to formalize this, co-investment vehicles has been a new concept by SEBI, and this has been very well taken by the category 2 AIF segment, right? So I always recommend that if you are dealing in pre-IPOs, don't do it individually through uh, unlisted brokers. Do it through a formalized setup through institutions like your AIF funds. Okay, you'll not only get more reliability, but you also get access to deals which are not available in the market. That's why the private market itself has grown a lot. Okay. And we all know private markets are mainly for HNI investors. Okay. So in short, in one line, I can say that SEBI is trying to formalize HNI participation in private markets through the framework of a credit investor. Okay. This is a one line summary of what we just discussed about co-investments. Third, obviously, and the most important reason why you would want to become accredited is because AIF funds, which are formed for accredited investors, have a lot of relaxations. The liabilities on the members of the investment committee is now reduced, right? You can also, as an HNI and an accredited investor, you can put forth your terms and conditions. If you want to, let's say, pay a lower management fee or a lower incentive fee than other investors, then you can ask the manager that, hey, you please form a new class of investors because we are now accredited as per SEBI laws, and we want to invest in your fund only if you give us a lower management fee or a lower incentive fee. Okay, so this increases your bargaining power because ultimately accreditation is given by KRA agencies which work under SEBI, and that adds to your reputation as well, right? More the reputation, more the bargaining power, irrespective of ticket size, because your ticket size have now reduced as we discussed earlier, right? Now we are also seeing a lot of customized products being made for a credit investor. One very common example I just showed you was the SIF. That's a specialized investment fund which has been launched recently, and SEBI is promoting a lot of mutual fund companies. In fact, even big PMS houses to offer new kinds of fund management services which cater to HNI and accredited investor. Okay. One small example I'll give you again. SIF funds can do long, short, both. That means when markets are bad, they can do shorting also. They can go against the market. And when the markets are good, they can always be bullish on the market through F&O securities or F&O contracts. Okay. But mutual funds do not have the flexibility. So again, in one line, I'll tell you that SIF, which is now for HNI and accredited investor, it offers the flexibility of a CAT-free AIF, but with the convenience and tax benefits of a mutual fund company, right? So again, if you want to participate in SIF, you should definitely have an accredited investor certificate. You don't need to invest 10 lakh rupees in one scheme. You can also invest less than 10 lakh, right? So this is a very important benefit which is given through SIF. And last benefit is, as I was mentioning, the accountability of investors on the investment committee reduces, because if you are an accredited investor, you can tell the manager that the decisions to be made of investments are your responsibility. You cannot hold the investors responsible for investment losses, even though the investors are on the investment advisory committee or investment management committee of the fund, right? So these are the major five reasons why we recommend accreditation for investors, okay, especially those who are able to meet the eligibility criteria. Now we'll just talk about some latest developments on in the last 3-4 months. I'm sure you must have heard your friends and family talk about accreditation and why it's important, why you should take it. That's why we are here in this webinar, right? So to explain that in more detail, let's first discuss and understand that we all know we have AIF, PMS, and SIF. Okay, there's another concept called as a large value fund for accredited investors, in which the minimum investment of every investor has to be 70 crore. Okay, this concept is more than a year old. We all know 70 crore is a huge amount for you and me and for all HNI investors. Okay, so primarily this new kind of fund was launched for institutional investors who are FII, FPIs, and FDIs. But now we all know that because of Trump tariff war, India cannot depend only on FPI and FII investments. So SEBI is now proposing to reduce the minimum ticket size to 25 crore. Okay. So if you want to participate in a large value fund, then you have to minimum invest 25 crore. Okay. Now again, we all feel that that's also a big amount, right? Because although some institutions can invest 25 crore minimum, but again, as HNI individual investors, you may not be able to shell out 25 crore in one fund. Okay. So with this development, what SEBI has proposed, they have issued a consultation paper. They are proposing that let us form an AIF scheme which will only be for accredited investor. Okay. So this is the recent development. 3 months back, SEBI has issued this uh, consultation paper. The best advantage, as we all know, that if you are an accredited investor, you don't need to invest 1 crore minimum in one fund or one scheme. You can even participate in a scheme in 20 lakh, 25 lakh investment sizes. Okay, so SEBI has seen the need. SEBI has seen that investors are interested in AIF market, and that is why we are seeing that a new class altogether will be launched soon, which is an AIF scheme only for accredited investors. Okay, what are some other benefits? Okay, let's discuss the benefits as well. The benefits are firstly, now, as we all know, I just told you that if you are an accredited investor, you can bargain with the manager saying that I want to pay you a lower management fee and you need to give me some benefits which are not available to other investors. Okay. This is currently not allowed in all AIF schemes as per SEBI AIF regulation. It's called differential rights of investors. Okay. So differential right of investors cannot be given to all investors who participate in AIF schemes. But if you are participating in an AIF scheme only for accredited investors, then in that case, you have the benefit of getting some differential rights, some additional benefits, which you can privately bargain with your manager. Okay. So again, this is a very good benefit. One example I can just tell you is there are so many family offices who are investing. I'm sure there would be some family office consultants over here as well. The family offices typically have minimum investment sizes and they only prefer investing in certain asset sectors. Like nowadays, we are seeing deep tech or space technology, right? So they can go and tell an AIF manager that if you don't participate in these sectors, we will not be able to give you the investment amount. Okay, you have to excuse my investment from all other sectors. So this way, having differential rights as investors is very important and it's crucial for the growth as well, right? The other benefit is that if an AIF scheme wants to extend the fund tenure, now there are times like what we are going through when the markets are little illiquid and unfavorable for exits. Okay, so SEBI has allowed AIFs to extend the fund tenure of maximum 2 years, subject to approval of two-third investors by value. Okay. Now for AI only schemes, that is accredited investors in the scheme, the tenure has become 5 years, which is same as your large value funds, if you see. Okay. So this is also a good advantage because if you're investing big ticket sizes and the investment is not suitable for an exit, you can wait for up to 5 years, not just 2 years. Okay. This is very good because in the global markets, especially if you're investing in early stage startups or growth stage companies which are pre-revenue, you will require a higher tenure for exit. Okay, average tenure of investment in PEVC is 7 years. So if your AI fund is only 7 years tenure, then it's difficult for you to exit. So now SEBI is allowing you to wait for more 5 years to get a suitable exit. Okay, and we all know the exits come in the form of IPOs or some kind of an exit round, which is done through secondary market, right? So this is also a very big advantage that you get a higher timeline, right? Last advantage in this screen is you can see that an AIF scheme can only raise money from 1,000 investors, right? But now SEBI is proposing that if the manager is only approaching a credit investor, then you don't need to get only 1,000 investors. You can get more than 1,000 investors. Why is it good for you as investors? I'll tell you because if you're investing lower amount of investment ticket sizes in one fund, you will need to participate in more funds. And to participate in more funds, you need the funds to accept your money and be within the limit of SEBI regulation. So now SEBI is altogether removing the limit of 1,000 investors so that now you can participate in more funds, right? Last couple of developments is firstly, the AIF manager of an accredited investor fund will not need to pass NISM exam. It's a very difficult exam. We have seen the market feedback and we have seen many new news articles also. Okay. So this way, now if you are running your own family office funds and you don't want to give money to an AIF, you can yourself launch an AIF fund wherein you are investing only your money or your friends and family money and getting the benefits of a category 2 AIF which other investors are getting. Okay. So this is again a reason why I'm saying that if you have the money, if you have the expertise, and you are able to identify the good asset classes, the good companies, then you don't need to actually go into an AI fund. You can do it your own also. Okay, so that is one thing which I am promoting from my. The trustees of the fund need not be appointed if you are having your own AI, as I just mentioned. Okay, so being the manager, you yourself can manage the functions which typically a trustee will need to operate. Okay, that freedom is not there for large value funds and it's not there for other AIFs. It's only going to be for funds which are addressing accredited investors. So now we've seen that why this concept is becoming more popular, how it's going to give you more benefits in the future, right? And as accredited investors, you have more, bargaining power as compared to other investors. That's that. Okay. One recent development also I thought I'll share with you right now is that currently what's happening, the investment manager of an AI fund will have to wait for you as investors to get the certificate of accreditation. And the certificates are given by your KRA agencies like CVL or NDML of NSDL, right? They take a lot of time. They typically take 2 to 3 weeks to get the processing done. Okay. So to save on this time, what SEBI is saying, you may not need to go through only a KRA agency. You can now simply just go to your fund manager, tell him that you know me, I am your good associate or a friend or a colleague. You know that my net worth is more than 7.5 crore. Then why do you want me to wait to get the certificate? Let me participate in your fund from now. So this freedom is a very important freedom which is given. And as investors, you can simply go and start giving soft commitments to the manager. Okay. However, SEBI has said that you can actually give the money to the manager only when you receive the certificate of accreditation. Okay. So this development is only to smoothen the process. You can now start making commitments to any PMS, SIF, or AIF without actually the certificate in hand, but with a promise that you will definitely get the certificate shortly. Okay. So this is where timelines are becoming more easy for both the manager and the investor as well. Okay. So this is a part of the ease of doing business strategy of the government, right? Now let's quickly talk about the document. As I was saying, SEBI is trying to make it easy. So as individuals, you are not required to give a lot of documents. Firstly, your common ID proofs like your PAN and Aadhaar card, passports, right? Because it is about net worth, you will need to get a certificate from a practicing chartered accountant stating that what is your net worth over the previous 3 years. Okay. As I was mentioning, your net worth has to be at least 7.5 crore, out of which half of it has to be in financial assets. So the CA will show the proof that what is the actual value of your real estate if you're showing it in your net worth, what are the ready reckoner rates, okay, in the previous 3 years, how has your net worth grown, and are you eligible to become accredited? Okay, so obviously, without the CA certificate, the SEBI KRA agencies will not entertain you. Okay, it's not, there's no point just uploading documents anywhere on any platform. First and foremost, I always tell you to get the certificate from a CA. Your CA can be your friend, it can be any CA who has a ICAI membership and a certificate of practice. Okay, so this is where we come in because we are now eligible to give you the certificate of net worth and we file the documents for you with the KRA agency. Okay. Of course, to get the certificate of net worth, we will require to see your demat account statements because we need to see what's your fair value of investments. We need to see your income tax returns to show your income, which you have filed with income tax department. And we'll also draft some basic undertakings for you, which SEBI has made mandatory. So undertaking simply states that you are well aware of the risk of becoming accredited, and you will not receive the same support from SEBI which retail investors receive because you're getting a freedom now. Okay, so certain undertakings which SEBI has made it mandatory, you have to sign it. Okay, the undertakings depend on what are the kind of entity. If you're an individual, then there are only two undertakings. If you're a company, you also have to submit your certificate of incorporation, your MOA, AOA, and also your net worth certificate from the stat auditor of the company. All companies have a stat auditor. So the stat auditor will have to give the net worth certificate, and a practicing chartered accountant will have to give the net worth certificate along with the stat auditor. Okay, so these are the two benefits. Okay, the stat auditor will give you the signed balance sheet and financials as per your ROC norms, and the practicing chartered accountant will give you the net worth certificate. Okay, same way for LLP. The LLP will require the LLP deed, and a trust will require trust deed. So more or less, your documents are around this. If you are individuals, you just need to give basically these 5 sets of documents: Aadhaar, PAN, passport, income tax return, and the demat account statements. Once you give these basic documents, then we can give you the undertakings to be signed and the net worth certificate depending on your net worth, right? What are the costs? So, of course, the costs are firstly, the first part is what the KRA will charge you. So, unfortunately, the KRA, which is CVL and the NDML, are charging firstly a 5,000 rupee processing fee for all kind of investors. And then, if they are successfully processing your application and you are eligible to become accredited, then you will be charged a 5,000 rupee fee for a 2-year certificate and a 9,500 rupee fee for a 3-year certificate validity. Okay. Now, the concept of validity is also very important. If on the date of your investment in AIF, if your certificate is not valid, then you will not be able to get the benefit of accreditation. Okay. So we always recommend that you go for a longer term duration certificate so that you can reshuffle your portfolio whenever you want, and you can keep diversifying across PMS, AIF, and SIF in the next 2 to 3 years. Okay, the costs are little higher for partnership firms, trusts, and companies, as we just see on the screen. Okay, where we come in the picture, we will be able to do all the documentation for you, as I suggested in the previous slide. All the undertakings will be filed. We will also issue you the certificate of the net worth, being a CE in the industry. Okay, and myself being an HNI investor who has got the license, we are well aware of what are the difficulties and what timelines we can see to get the certificate. Okay, so this is also the benefit that we offer. We used to charge 5,000 rupees per certificate for investors, but because PMS Bazaar has very uh, proactively approached us saying that we need to serve our investor base, so all the clients of PMS Bazaar can avail this service at only 4,000 rupees, where we will be doing the end-to-end filing with the CVL. We'll do the undertaking documentation and also issue you the net worth certificate. Okay. See now, the CA certificate has a lot of risk associated with it. So being a CA and having a COP, we cannot go below certain rates because ICAI does not allow us to do that. Okay. Otherwise, we'll be very happy to just offer this free of cost as well. But because we are issuing the CA certificate, we have some liability which we are taking on, and hence this is the minimum charge that we do. Right. So again, why us? As we all can see, that me being from the CA industry and also from the AIF investments in industry, we are very much aware of what's going on in the AIF, SIF, and PMS domain. As Arvind was saying, we are catering to many custodians, trustees, fund accountants, managers, and even fund distributors, right? We are also empaneled with KRAs in India as well as Gift City. So, in case you want to invest money into Gift City through LRS route, you can also do that by getting the certificate of accreditation. And the Gift City feeder funds will give you the same benefits which Indian funds will give you, right? So, this is also one benefit for you as investors. And also, as my experience, we are active investors in listed markets, pre-IPO shares, and startups. So we are aware of the deals happening in the market, which always we work with our clients. So I think this is it. Thank you from my side. In case you have any questions, please feel free to ask. I'm already getting a raise of hand by Rish M. So Arvind, how do you want to take it?
Yes, sir. Yes, sir. Thank you for the wonderful presentation, sir. It was very informative.
Thank
Dear
you.
participants, if you want assistance in getting your accreditation certificate, you can drop a mail to info@PMS Bazaar, or you can drop your contact details in the Q&A box also, your mobile number and email address. So you have
Perfect.
already answered a few of my questions, sir, which I thought of asking you regarding this. So I
Okay.
have a couple of questions. So I will ask it. So family offices and ultra HNIs are increasingly being recognized as critical participants, sir, in Indian capital markets nowadays. So from
Sure.
your perspective, how does accreditation specifically empower them in professionalizing their investment approach, and what best practices should they adopt to maximize the accreditation advantage?
Perfect. So, as I mentioned earlier, family offices in India are anyways managing their funds professionally through family office consultants and managers. Now, what we need to do is that those managers should be aware of the benefits of accreditation. Okay. The second important thing is that the family offices should now be able to diversify their investments across various AIF strategies, PMS strategies, and even SIF strategies. Okay, so earlier they could not do that because there was a minimum ticket size of 1 crore on AIF, 50 lakh in PMS, and 10 lakh in SIF. If you get the accreditation, then you do not need to invest 1 crore in one AIF. So the benefit is that instead of investing your money in, let's say, 10 AIF funds, you can now invest it in 50 AIF funds if you want to diversify. Okay. And again, like my opinion, I can just share. Typically, family offices are doing either CAT 1, CAT 2, or a CAT 3 investment. Okay, CAT 1, CAT 2 is your unlisted and startup investments. So there are more than 1,200 funds in private equity venture capital markets in India. And family offices tend to only end up investing in two or three of them to diversify the portfolio. Now look at the option that you have. Okay, you are able to diversify across so many investment types and also thematic funds as well as per your family office IPS statement. That is, which sectors you prefer to invest or not.
Yes, sir. Got it, sir. That's perfect. So we have got a lot of questions from audience, sir. Also the
Okay.
contact details. Who are interested, they have posted their contact details. So I'll
Okay.
just run through it, sir. So
Sure.
Siddhant is asking, so HUF net worth will include all members' net worth collectively or assets in the name of HUF only?
So see, HUF is you have a Karta and you have a co-partner. So as I mentioned, your co-partner's net worth can be taken into account of your HUF also. As far as the co-partner is your close relative, that means only you, your spouse, and your children. Okay, but you cannot take the net worth of your joint family and extended family members. So that is one thing which you need to take care of.
So Tushar is asking, please share how to do accreditation for Singapore-based NRIs.
Okay, so for Singapore-based NRI, as I mentioned, the network criteria over there is 1 million Singapore dollars, right? And if you want to show a joint net worth of real estate and financial assets, then the criteria becomes 2 million Singapore dollars. Okay, so they have clearly bifurcated that only 1 million has to be in financial assets and maximum 1 million can be in real estate. So minimum 2 million Singapore dollars you have to have as net worth. And if you don't have that, then your income jointly with your wife or your spouse can be 300,000 Singapore dollars. Okay. To file that, again, you can approach us. We will be very happy to get your accreditation done in Singapore as well, because we are accredited with foreign KRAs as well.
Tushar, you can share your contact details in the Q&A box. So Dalbani is asking a question, can NRI client based out of Canada get accreditation in GIFT City, sir?
You can get the certificate, but see, if you're an NRI client coming from Canada to invest in Gift City, then you don't actually need that immediately. Firstly, I suggest that you open the account in Gift City through an exchange like your India NX or NSEIX. Identify a feeder fund of the AIF which you want to invest in. Okay, your minimum ticket size, I'm sure, will be around $2,500 because that's what typically we see feeder funds raising from Gift City. Okay, so if you're NRI in Canada only investing in Gift City, then you do not actually need an accredited certificate. If you're investing in India, then that is a time where accreditation will benefit you.
So
And just to mention, SEBI is the regulator of Indian markets. In Gift City, we have IFSCA, which is the regulator. IFSCA is yet to get the exact accreditation norms in the public domain. Okay, what we are hearing is that it's going to be same as what SEBI has prescribed, but with certain more relaxations because you don't need to have a PAN card in Gift City, as we all know. So you don't need to submit a PAN card number over there. Without the PAN card, you can only submit your proof of net worth. Okay, the proof of net worth has to be signed by an Indian net worth or an Indian CA, not a foreign CA. Okay, so that difference is what is going to come out. Otherwise, up till now, it's the same.
So there is a question on with lower ticket sizes now being offered to accredited investor, is there a risk that investors may end up incurring relatively higher fees or costs compared to larger ticket investor, and how are fund managers addressing these concerns?
It's a very interesting question. So, see, as far as I can see, I don't see any cost increasing for accredited investors. Okay, even though let's say your average ticket size is let's say 2 crore in India, and you have institutions coming at 10 to 15 crore. Okay, firstly, because you now have accreditation, you can invest less than 1 crore in one AI fund. Okay, second benefit is that you can diversify across investors. Okay, the cost which you will be incurring will be low because you have lower management fee which other small investors will be paying. Okay, so if you want to draw a parallel with your other investors in the same category of investment. You cannot compare yourself with foreign investors who are investing billions of dollars and getting a very favorable management fee. That unfortunately you may not get because you don't have the bargaining power which a foreign investor may have. But definitely your bargaining power will be more than a retail investor or any other investor who does not have a accreditation certificate. Okay. So that way, I think you should draw a parallel. In terms of cost, the cost which you're incurring, if you see in the fees, is somewhere in the range of 20 to 25,000 rupees, which if you see in the overall scheme of things, it is very less because if you're investing, let's say an average 1 crore investment in AIF, you will end up paying at least 2% management fee and minimum 10 to 15% incentive fee with a very good manager. Okay. So with these management fee structures in place, you are ending up paying normally around 4 to 5% of your investment. That is 4 to 5 lakh rupees annually on an average over 5-year tenure. Okay. You are cutting down that cost, and the cost of cutting down the management fee is 20,000 rupees today. So I think it's a very good investment because by investing that 20,000 rupees today, you can reduce the management fee by bargaining with the manager, make it 1.5%, which will then reduce your cost from 4-5% of your investment to 2 to 3% of your investment. Okay. So if you're saving, let's say on an average 1.5-2% on your investment as cost, that saving is only at a cost today of 20,000 rupees. So in my sense and in my maths, I think it's totally worth it.
Understood, sir. So Karan Mehta is asking a question. I am a US citizen who is resident in India with an OCA card. Will my accreditation be based on the criteria for Indian residents, like SEBI's framework?
So firstly, I need to see if you have the demat account in India or not. Okay, because if you don't have a demat account, then anyways, Indian regulations will not apply to you. Okay, so you first thing I think you should start is a demat account. Get your KYC done by your brokerage firm over here, whichever you want to open, and then apply for accreditation. If you pass that stage, then yes, you will be eligible for accreditation over here in India.
There is a question from Pankaj Jain.
Hmm.
If invested in AF Cat 2 based on this accreditation certificate, does that mean certification has to be maintained till the date of maturity, or it's relevant only at the time of investment?
Very good question. So the validation of the certificate will help you to get an entry into the AIF fund. Okay, but you have to stay accredited till the end of the fund tenure if you are availing the benefits of accreditation. Okay, so hence now, for example, as I was mentioning, SEBI is now proposing a new asset class of AIF schemes only for accredited investor. So you have to stay accredited throughout the fund tenure. You cannot just enter into the fund being accredited and then stop being accredited after 3 years or 2 years. That is not allowed.
So Suman is asking, what role does GIFT City play in providing accredited investor with access to global markets that add diversification beyond domestic markets?
Very good question. So, if you're an Indian investor, you want to invest in Gift City, then through the LRS route, you can invest $2,500, $250,000 if you ask me, on a yearly basis. Now, if you're having that fund and you want to invest across, let's say, US stocks or US startups, then you can invest it through the Gift City mechanism. There are many offshore funds in Gift City which collect money from Indian investors and invest in other foreign markets. Okay. So in those funds, accreditation will help you if the fund is accepting a credit investor. If they're not accepting a credit investor, then it will not help you. Okay. Secondly, if they're accepting the investors, you will be able to negotiate your own management fee, incentive fee by having a different class of units assigned to you in Gift City. So that is also one benefit which you can avail.
Yeah. Rajesh Shrikaram is asking a question. If the equity assets are held jointly between husband and wife, will you take 50% to each of the joint holder when you take net worth?
No, you can total up your net worth of yourself and your spouse to meet the 7.5 crore net worth criteria or a 2 crore annual income criteria. So you
Yes.
don't need to allocate 50%. In fact, I would recommend that take the certificate in the name of the either HUF or an individual name where even your wife can participate. And then when you invest in an AI fund, you can invest as a joint investor. There's a concept called as joint investor where you and your spouse can jointly invest in an AI fund because you all are accredited investors.
Yes, sir. So Jay Jain is asking a question. Can any AF refuse to take lower investment from accredited investor, or is it mandatory for them to accept lower investments?
It's a very good question. So see, SEBI is not regulating that, but even the AI managers are now understanding that if you don't give the benefit which investors are supposed to get, especially a credit investor, then they'll not come back to you. So there are some large value funds and very big names. I don't want to take any names over here. There are big names who are not taking investments below a certain ticket size of minimum 1 crore, as we all know. Okay, and they are discouraging investments from a credit investor because they don't want to cater to small ticket sizes. Okay, but at the same time, they also know that in the next 6 7 months or maybe 1 year, there will be so much competition that even the existing investors of that fund will start allocating money to 10 other funds because they will get the benefit of low ticket size. So it's just a matter of time that you will be able to diversify, and those managers who are not accepting lower ticket sizes, they will start accepting that as well.
Yes, sir. Finally, one question from Ramesh. For NRI from USA, how can I get a Indian accreditation? Can I show pay stubs and income statement from USA for 2 crore income criteria?
No, you cannot show your US based income in India, as I was mentioning. So if you are an NRI, you will need to show your assets. That is, and you can show assets in India as well as US. Okay. So income criteria is not very good for US based investors. You should use the network criteria that is more relevant because later on SEBI may ask you that you are earning in dollars, but you are getting the benefit in Indian rupee. So that's an unfair thing. So that is why they will obviously consider the asset value more as compared to income.
Yes, sir. I
Right?
think we can take one more question before we wind up. Jitesh is asking, how do you value the real estate investments in India for accreditation purpose?
So in that case, the KRA agencies have clearly mentioned that you have to use a ready reckoner rate of your specific city or town. That's clearly mentioned. So that is the most easiest thing. Okay. And that's also sometimes it's a disadvantage because, as per your valuation, you will value your house higher, but the ready reckoner rates will be used for the valuation purposes. So that is somewhere a disadvantage. But at the same time, you have, as I mentioned, only 50% of your net worth has to be in real estate. The remaining 50% has to be in financial assets. So don't just depend only on real estate net worth because that will not be alone sufficient.
Yes, sir. I think we have come to the end of our session, sir. So thank you so much for grazing in our show and sharing all these insights. We
Thank
definitely
you.
look forward to have more sessions with you, and we will share these questions also, sir, with you so that your team can answer those questions to the audience.
Sure. We'll be happy to do that and happy to work with PMS Bazaar. It's good that you all are having these sessions, which is relevant for the market. And
Yes, sir.
yes, definitely my team will be happy to solve all the queries of your client.
Yes, sir.
Yeah.
Thank you all. Thank you all for attending the
Thank you.
session.